optical art.
Okay guys, I hope you watch this video all the way through. This is going to be a very in-depth analysis about Bitcoin and the markets as a whole. And as you saw in the thumbnail, so Bitcoin is down around 32% from the all-time high. So the question is, even if you're at a loss, should you take your profit, get out now, or should you hodl? And that's what we're going to go through right now. So again, Bitcoin is down 32%. So I'm going to show you this chart. I have a lot of stuff to go through, but I just want to make this very clear and make you understand. Back in 2013, 2015, we know that Bitcoin had a drop of at least 85%, all right? And then in 2017, 2018, Bitcoin had a drop of around 81%. So this is current price action over here, right? So if we have an 80% correction, and we can see clearly this was support back here, support, we broke support and we had a drop, all right? Same thing, we had support, you know, we had our little pump, our little run up, and then we broke support and we had a drop. Well, the same thing's playing out. You know, we're holding support right here, right? Support. If this support breaks, then we're going to have a drop. And again, if we had an 80% drop here, an 80% drop here, it is very possible we have an 80% drop here. So should you sell or should you hodl? So that's what we're going to cover. So this right here, and guys, this is important. So we know that we're below, this is the 21-week moving average. Typically, if you're below that in your bear market, and if you watch my last video, this is still, TA is the same, it hasn't changed. But this is the 50-week moving average. If we break the 50-week moving average, we're going to go much lower. We're caught between the 21-week, again, below that, you're in a bear market. The next point of support is going to be the 50-week moving average. Guys, I've talked about this. Now, this is where I'm going to get into what I'm expecting with the markets and getting to the point, you know, whether you should hodl or take your profit and just accept your loss. And there is a benefit to that. So I've shown you this, guys, plenty of times. This is the DXY, the US dollar above right here, and this is Bitcoin below. So we know for a fact when the dollar dropped around 15%, Bitcoin pushed up 2,500%. When the dollar pushed up almost 11%, Bitcoin dropped about 84%. When the dollar dropped 14 or a little over 13%, Bitcoin pushed up around 1,474%. And guys, the dollar has been pushing up, and look what happened. Bitcoin's pretty much topped out, and now it's starting to come down. So I'm just showing you the inverse correlation. If the dollar continues up, Bitcoin will continue down. That's one metric right there. And guys, some people don't want to believe this, but Bitcoin is tied into Wall Street. Bitcoin follows the U.S. markets. This is the Dow Jones. You can see right here on this, the 3rd of October, 2018. You notice that, again, this is above is the Dow Jones, below is Bitcoin. But the Dow Jones right here, it dropped around 19%. Bitcoin dropped around a little over 52%, right? And then over here, this is February. This is the 13th of February. You can see that the Dow Jones, it dropped around 38%, right? Bitcoin dropped around a little, almost 63%. And then the markets, all this free money that the Fed was pumping into the markets, it caused the Dow Jones pushed up over 101%. Bitcoin pushed up, you know, 1,648%. So you can clearly see when the markets, U.S. markets are up, Bitcoin's up. When the markets come down, Bitcoin comes down. I showed you the inverse correlation with the dollar. You can clearly see the correlation between the U.S. markets and Bitcoin. The Dow Jones, guys, I have charts. I have a method of charting I came up with. I even teach you this method. I have tutorials showing you how to create these charts if you're interested. But guys, you can see this line right here. We got resistance right here. There's resistance, resistance, resistance. We're right up at this point. So if you're looking for an ideal point to short the Dow Jones, right now is the point to do it. This is going to be a lot of resistance right here, around 36,860. And this line goes way back. Again, I have charts for stocks, altcoins, Bitcoins. I try to help you know when to get in and when to get out. But it looks like the Dow could be topped out. So this gets on to the point, should you take your profit? Should you stay in? Should you hodl? I get it. Some people are at a loss. They don't know what to do. Should I just go ahead and sell and buy back lower? Should I stay in? Well, it depends on how you're trading. But this is the facts that I want to share with you about the markets. So we already know Bitcoin follows the markets. And we know about inflation. Inflation is skyrocketing. The dollar is pushing up. So the value of the dollar is pushing up. Remember, Bitcoin is inversely correlated with the dollar. If the dollar continues to push up, Bitcoin's going to come down. And you say, but we have inflation. So a lot of people think, well, if you have inflation, that means the value of the dollar is going down. No, that just means the price of goods are going up. Inflation's at an all-time high. I think that it hasn't been this high since like the 1970s or something. So how do you stamp down inflation? How do you fix the problem? Well, first of all, I'm just an example of inflation. You've got used cars. The average price of a used car is $29,000. That's insane. They can't get new cars. They can't get chips for them. There's supply issues. Right here, shipping container costs. The cost of shipping a shipping container. Back here, so it used to cost around $2,000 to ship a shipping container in 2020. Now it's up around average $8,000 to $10,000 for like a 40-foot container. And you can see if it's from Asia, right? This right here, see China, North America, look, $19,000. It was $3,800. Now it's almost $20,000 to ship a shipping container. This is another example of a freight container shipping company, $21,000 to ship a container. It's costing more to ship goods, and they're passing on the cost to the consumer, and that's causing inflation. So how do you get inflation under control? Well, the Fed chair, recently, it was November 3rd, they're tapering off the free money on a monthly basis. The reduction will see 10 billion less in treasuries and 5 billion less in mortgage-backed securities. So they're already taping off the money sooner. Smart money, the Wells, and Bitcoin know what's coming. That's why the price has been dropping. These Wells with all this money, they're jumping out. They're taking the profit. Bitcoin is a risk-on asset. So they don't want to stay in if this is going to crashing down. The Fed's already said they're taping off the free money, and they've also talked about raising interest rates. The committee members now say they expect inflation to be 2.6% by the end of the year, up from 2.2% when projected in September. The Fed's preferred yardstick for inflation is index personal consumption expenditures, which was 5% in October. Raising interest rates in the Fed's traditional tool for keeping inflation under control. So if they raise interest rates, that will stop inflation. Well, we know what happens historically. This is the S&P. Every time that they raise interest rates, what happens? Well, in 1999, they started raising interest rates, right? We were getting the S&P was peaking, right? They raised interest rates. What happens? The S&P had a crash, right? So, they had to lower interest rates, right? They lowered it, and what happened? The stock market pushed up. They started raising interest rates again. What happened? We had a crash. Now look at the interest rates. They're zero. They're flatline. And look at the market just pushing up. All this free money they pumped into it. So in order to stop inflation at some point, and they've already hinted at it, that they're going to have to raise interest rates. So that means if they raise interest rates, this is going to come crashing down. And we already saw the correlation. Bitcoin is tied into Wall Street. If the markets come down, Bitcoin will come down as well. So this gets me to the point. So should you hodl, or should you take your profit? Well, let's look at this. So we know for a fact, all right, we can go back and look. You can see right here. So, and by the way, this yellow moving average is the 200 weekly moving average, and this red moving average is the 300 weekly moving average. Well, we can tell that this is our support, this white line right here. This is support. We could come back and test it again. But my point is, you can see we found support right here, this yellow moving average, 200 weekly, all right, up to our peak. We pushed up a total of over 8,000%, right? And then we came down and we tested the right here, the 200 weekly moving average again, and we pushed up a total of almost 2,000%. So our previous bull run from 2015 to 2017, we pushed up 8,000%. Once we test the 200 weekly moving average, we pushed up to our peak right here, which was about 2,000%, which is a quarter of how much we pushed up last time, right? So and it makes sense, guys, if every time we peak, we have an 80% correction, and typically we come down and test right here when we had our drop during our COVID crash, we actually bottomed on the 300 weekly, right? So these are the two moving averages to watch if we had a drop. So if we come down, so right now price is at 46,400. So if you stay in and you hodl down, that is a drop of potentially another 57%, possibly 63%. Depends on if we bottom at 200 weekly or if we bottom at 300 weekly. That's a hell of a drop. If you stay in and it comes down, if you would have sold right now, all right, if you sold right now, you could potentially buy your Bitcoin 50% cheaper. So that means if it pushes up, so if it pushed up 8,000% back here, it pushed up a quarter as much. The next time it pushed up 2,000%, a quarter of back here. So we're looking at potentially if we push up, if we bottom, we come down and we bottom somewhere on the 200-week moving average or the 300-week, whichever one it is. That means if we push up a quarter of how much we pushed up last time, we're talking about 500%. So that means if we come down, right, this would be the point to buy. So if you sold now, you could buy your Bitcoin 50% cheaper and then potentially ride it up about 500%, to around 100,000. That seems likely. This was resistance. This was resistance. It's very possible that's where it could push up to. But we're talking way, way out, 2023, 2024. So it just makes sense. Why would you hodl all the way down to potentially $20,000, maybe $15,000? Well, this right here is like 16, 17,000. Why would you hodl down? Why not just, if you're in a loss, if you bought earlier, you're not at a loss. But if you took your profit now and bought it back cheaper, when it pushes back up, you're going to have more money. You're going to have more in your bags. So it makes sense to me. Again, I'm not in the situation, but in hindsight, if we crash, I would have rather have taken my profit, bought more at the bottom, and rode it up, and then you've got more when you push up, rather than hodling all the way down. In the value of your Bitcoins just going down and down and down. It doesn't make sense to me. So the question is, should you sell? Well, I wouldn't tell anyone to sell. I think what you should do is learn how to use a stop loss, guys. Like right now, we're at support. If this holds this support and we do not break this support right here, right here, we're mid contact, right? If this breaks, we know we're coming lower. Once, just like here, we broke support, we drop. we broke support, we drop. If we break support, we will drop. So have your stop loss set. If we break a certain support level, you know, potentially 41,000, 40, let's just say 41,000. That's a safe stop. If we break below that point, guys, we're coming down much lower. $49 a month, you get access to Bitcoins, altcoins, precious metals, Discord, and our Twitter. It's $49 a month. That's dirt cheap. And I even teach you my method. I could have kept this to myself. I don't have to share this with you. But if you want to learn how I create these charts and create them for yourself or any asset, they're right here on my website. Sign up to. But guys, the link from my website will be pinned in the first comment in the description. I'm just telling you, I think there's a lot more downside. I've shown you why this is the case. We know that we're potentially going to break key support. If we do, we know we drop at least 80%. 80%. So it's very possible once you break the support, we come down another 80%. And if that happens, guys, you're going to be just, if you didn't sell and take your profit, just hodling down to the bottom just sounds so stupid. And again, don't sell, but have a stop loss set at a point. So if it breaks below it, you know, if we break the support, we know we're coming down at least another 50% down to the 200 weekly. So just practice some risk management. But again, I think hodling is just stupid. Why would you hodl down to the bottom? If you sell and you buy back, you have more Bitcoin to ride up and you make more money. It's common sense. But guys, that's pretty much it. Until the next video, stay safe, stay smart. I'm out.